Hello! Today we will discuss what's happening in the cryptocurrency market. Here is what we will cover. Review the Bitcoin price chart, examine the Ethereum to Bitcoin pair, analyze how US macroeconomic data may impact cryptocurrency prices, discuss on-chain analysis as an essential tool every crypto enthusiast should have. We will also compare two coins from the previous cycle, looking at the returns where one asset relied solely on technical analysis and the other on on-chain analysis. Additionally, we will talk about a case from one of our users who made a 50% profit by tracking a wallet from their personal watchlist. Bitcoin chart. We are trading slightly above the 58K mark. After the release of US macroeconomic data on the manufacturing sector and business activity on September 3rd, we saw a correction that peaked at -7%. Some of the decline has been bought back, and on lower time frames we are still trading within the liquidity block since August the 8th. Drawing parallels to 2019, we observed similar behavior, where Bitcoin remained in a channel for a long time, with a breakdown pointing to final capitulation, followed by recovery, acceleration, and the much-anticipated alt season. The focus now is on employment and unemployment reports, and later we will discuss how this data might impact the markets. Ethereum-Bitcoin pair. In our previous videos, we touched on the Ethereum to Bitcoin pair, which reflects how strong Ether is compared to Bitcoin. The higher this ratio, the stronger Ether and usually other altcoins are. Previously, we noted that losing a key support line led to a significant correction for digital silver. Today, we will focus on different historical data. In 2016 and 2019, after losing this line, the decline lasted 2 months, with the second candle completely engulfing the first. However, the third month saw a rebound and trend reversal. History doesn't have to repeat itself, but there is a reason to believe that final capitulation and an altcoin market reversal may be near. Macroeconomic data on employment and jobs. The manufacturing data for September the 3rd showed a mixed picture. The Business Activity Index, PMI, and employment have slightly improved, but are still below the neutral level, indicating challenges. The index of new orders was below forecast, signaling weak demand, while the price index showed growth, confirming inflation. The index of new orders was below forecast, signaling weak demand, while the price index showed growth, confirming inflation. Forecasts for non-farm payrolls are 164K compared to 114K last month, while unemployment expectations are at 4.2% versus 4.3% from the previous period. Better than expected job and unemployment data could be a positive signal for the US economy and may support a local cryptocurrency market rally. Better than expected job and unemployment data could be a positive signal for the US economy and may support a local cryptocurrency market rally. On the other hand, worse than expected data could point to economic problems, weakening the US dollar and potentially driving further declines in cryptocurrency prices. Part 2 On-chain metrics. 2.1 Technical analysis versus on-chain. Here is a weekly chart of the altcoin Dash and its behavior during the last growth cycle. The return on the asset based on buyer interest at horizontal volumes peaked at plus 600% profit. Using technical analysis for altcoins, you can predict behavior based on the descending Fibonacci grid, identify potential bottom zones, and set price targets. However, what we see on the Dash chart is not the strength of the asset, but rather its movement with the market. When the whole market grows, so does every altcoin. Conversely, the Dent asset, which showed no signs of life for a long time, provided much higher returns, peaking at nearly 100x. This is far more than what could be achieved with Dash through technical analysis alone. Dent's impulse was driven by influential capital accumulating the asset during the bear market phase. Eventually, this capital led to the token growth, making several investors very wealthy. Thus, while technical analysis is valuable, using on-chain analysis allows you to determine whether influential capital is interested in a specific asset, helping you optimize your investment strategy. Case study from a subscriber. One of our subscribers shared their strategy for tracking smart money behavior. By creating a personal wallet checklist based on successful trading criteria, such as realized P&L, the user monitored the wallet on August the 12th. This wallet, with a realized P&L of over 2.8 million, showed interest in the Prime token. After analyzing the transaction details, the user noted that the wallet had received 250K worth of tokens from Coinbase. Seeing that this wallet typically sends assets to the smart contract of the Echelon Prime platform, which develops useful tools for Web 3.0 games, the user concluded that the token had value despite its previous significant growth. After evaluating the risk-to-reward ratio, our subscriber bought Prime for speculative purposes, and soon the asset showed growth, generating a plus 50% profit. Key takeaways. We discussed the current picture for Bitcoin and altcoins. We touched on important macroeconomic data that could affect cryptocurrency prices in the near future. We talked about modern on-chain analysis tools which can outperform traditional technical analysis. Finally, we shared a case study where one of our subscribers made a profit using our service features. Remember to always apply risk and money management when trading or investing. We are hosting another contest to support our viewers. Here's how it works. In the comments, tell us how many multiple or excess the early Pepe holder from our blog post achieved. The first 5 commenters will win. If you are subscribed, we will give you an extra 3 days on your plan, and if you haven't subscribed yet, we will give you 2 trial days instead of 1. That's it for today. Like and share this video, and don't forget to use the best on-chain analysis tools from Arbitrage Scanner. See you next time.